What's going on, YouTube family? Welcome into today's video. In this video, we're going to be talking about and we're going to be doing something a little bit different. I'm actually going to be taking you through an article in which the analyst and I actually have differing opinion. It's going to be about Beyond Meat, as you could probably tell by the title. But the point of this video is to kind of show you guys how important it is to be doing the research work and developing your own opinions, because you might have a different opinion than someone else, and it might be better off in your end if you develop your own opinion and you stick by your opinion. Because me personally, I know in the past a lot of times maybe I've just gotten into stock for whatever reasons and I wasn't doing the research work and I wasn't putting in the work, and I would see some analyst or I would see someone else come out with a video or an article talking badly about the stock, or vice versa. They were talking really good about the stock and I wasn't in the stock and I felt like I needed to be in the stock, and it ultimately just did not end well. So you need to be making sure you're putting in the research work, developing your own opinions, and all those things. So I hope you guys really get some value out of this. I hope you guys really get an insight on how important this research work is, how I see a stock, how I kind of go about developing my own opinions. If you do, make sure to drop a like on the video. That really does help out the channel massively, and it really does help the channel grow. There's probably not going to be a ton of cuts in this one. I'm probably just going to read the article, just go over my opinions on it, what I disagree with the analyst, and just post the article on the screen. But if you do, make sure to drop a like on the video. Like I just said, you want to see more videos like this, make sure to subscribe and turn on that notification bell. So the title of this article is titled Beyond Meat Aging Past Its Expiration Date by Gary Alexander. Shares of Beyond Meat have plunged 35% from their all-time highs, but despite this, the stock is still up approximately 70% over the past year. Investors have reacted sharply to the company's fast-fading growth as well as severe margin pressures. The loss of sales in the restaurant channel has led to operational chaos, including inventory write-downs and repackaging units to grocery stores. Now see, this part right here, this can be misleading for a lot of different reasons. Obviously, the restaurant industry took a huge hit in 2020 because of the virus, and a lot of companies, or a lot of restaurants rather, had condensed menus. And although a lot of restaurants do want to introduce these new vegan products and Beyond Meat products, the problem is a lot of restaurants are just trying to get through the pandemic. They're not really worried about bringing in a newer audience or wider audience at this point, getting new products out there. They're just like, look, we need to stay afloat, and that's the bottom line. We just have to do what we have to do to just get through this time, and then once we get through it, once 2022, 2023, whenever it is, all this passes, once it's all past us, then we can start bringing in these new products. Even grocery revenue, however, has taken a severe hit. Beyond Meat faces several risks, including plant-based meats being a passing fad, competition, as well as oversaturation. And I mean, I guess with this, you could make the argument that plant-based meats are a fad. Unfortunately for this analyst, they probably didn't do their full research on the veganism industry, and they don't see that more and more vegans are coming about like I see it. And like anyone who's putting in that research work and just seeing the number of vegans increase more and more year over year, they probably just don't see that. And as for the competition, well, there is definitely competition in this space. I'm not knocking that at all. There's absolutely competition. There's Impossible, Tattoo Chef, and others. In my opinion, there's really not another company that can compete with the branding like Beyond Meat can. I just feel like Beyond Meat is so far ahead of the branding department, it's going to be very tough for another company to compete with them. At one point in mid-2020, Beyond Meat looked like it couldn't fail. The most well-known maker of plant-based meats has been able to steer its stock away from poor restaurant sales, instead focus on how much traction Beyond Meat was getting in U.S. grocery stores, driven by continued product rollouts. Yet as the year wore on, and especially after Beyond Meat released dismal third quarter earnings, investors' optimism shifted. Post Q3 shares of Beyond Meat retracted approximately 35% from their all-time highs, though the stock still remains up 7% over the past year. That's right, because I forgot, all great companies never ever have bad earnings. If you're going to be a great company, if you're going to be a growing company for years and years and years, you always have to have great earnings, and every single time you have to beat expectations. Every time. Gotcha. Very short-term mindset here, it looks like. Very short-term. The question for investors now is Beyond Meat a buy-the-dip situation? Is this a rare opportunity to buy momentum stock while it's on a sale, or does the correction have further to go? I think it's a great deal. That's just my personal opinion. The reality for Beyond Meat is now fairly dire. We've known about poor restaurant sales due to the virus all year long, but in quarter 3 we saw a serious revenue deceleration come out of the relatively healthier grocery channel as well. Beyond Meat's gross margin profile, which investors are closely watching as an indicator of when Beyond Meat can scale to more meaningful profitability, also went into taters in quarter 3 as the company dealt with overly inventory for the restaurant, what it calls food service channel, leading to spoilage write-downs as well as cost repackaging. So again, with that little portion right there, it's very apparent that the analyst is just like completely overlooking the long-term vision and where this company can go over the long term. They care about profitability in the short term, while Beyond Meat's actually focusing on attracting more people and getting their name and brand out to more and more people. Kind of like, and I'm not comparing them to Amazon, but this is what Bezos did. He, as we talked about in the Jumia video, video. Check that out if you haven't. But as we talked about in that video, Jumia is focusing on short-term profitability. They want to get profitable very quickly, and that's what this analyst wants. As opposed to Bezos, when he first found Amazon, when he was getting Amazon out there, he wanted to focus on the long term. He didn't care about profitability. That was something that could come later on. What he wanted to do was get the brand, get the name out to more and more people, reach as many people as possible, put as much money back into the business as possible, and just do that and then focus on profitability over the long term, which is what Beyond Meat is doing. This analyst, like I just said, really has a short-term mindset, and I don't think it's honestly that great of a mindset, to be perfectly honest with you. We'll cover Beyond Meat's most recent quarterly results in more detail in this article, but beyond the current situation, these remain several key risks for Beyond Meat going forward. Here are the top risks I see. Plant-based meats fail to gain any significant traction beyond their current state. It's highly possible that plant-based meats become a passing fad, especially as more and more health articles highlight the amount of sodium that Beyond Meat must put in their burgers to artificially replicate the taste of meat. Beyond Meat is unveiling a new flagship Beyond Burger in early 21, one that purportedly contains less saturated fats, but we have yet to see how consumers respond to that after a broader rollout. So plant-based meats are going to become a passing fad solely because of the sodium in Beyond Meat. I mean, does that sound biased or anything? That clearly sounds biased in my opinion. This analyst also doesn't even touch upon how plant-based meats can be better for the environment. They can be better for people who have high blood pressure or diabetes or any of those things, but none of those things matter. Nope, just the sodium in Beyond Meat causes this to be a passing fad. And even though they're attempting to fix the problem that they see in their product, it doesn't matter at all. They're just completely overlooking it in this article. Again, I feel like this is a very biased article in my opinion. Competition and price. Beyond Meat may be the most well-recognized name in plant-based meats, but it's certainly not alone. Impossible Foods is the next most recognizable vendor and may cap Beyond Meat's market share gains. And there's also price to consider. Beyond Meat is rarely the least expensive menu item at a restaurant, and amid a pandemic that has left many middle-class families struggling, expensive plant-based meats may no longer be a realistic alternative, at least not for routine eating. So as I talked about in my Beyond Meat stock analysis video, Impossible can't even keep up with the supply and demand like Beyond Meat can. They just can't. They've come out and said it, and they've openly admitted they just cannot keep up with the supply and demand. So that's why they can't be in a lot of these retail stores or chain stores, because they just can't keep up with it. And although I have heard a lot of great things about Impossible Foods, that's the bottom line. They can't keep up with the demand. And if you can't keep up with the demand, you can't stay in the game. You can't be in the fast lane. And although those plant-based burgers that Beyond Meat's putting out right now, and those plant-based products that Beyond Meat's putting out right now, although they might be a little bit more expensive now, if they can get those margins down, if they can get those prices down, I mean, it's game over. It's going to be game over, guys. It's going to be like Tesla and EVs. Once you can get a $25,000 Tesla, game over. Bye-bye gas-powered cars. Game over. Saturated distribution. Over the past several years, Beyond Meat has grown tremendously on the basis of wider distribution. The company has been signing flashy deals and expansions with brands like Yum and TGI Fridays that made its product far more accessible. But the pace of new partnerships will slow down as Beyond Meat becomes more saturated, which will put pressure on continued growth. So here, the fact that they're getting into more and more stores, more and more Walmarts, things like that, is really completely overlooked. And I forgot, unless you're constantly getting new deals, you have to have a new deal every single minute. It's a failure as a company. More on the last point here, you can see in the chart below that Beyond Meat is already in some of the largest retail and restaurant chains in the United States as well as overseas. Domestically, Beyond Meat products are already featured at the largest retailer stores, including Walmart and Target. Okay, so they do talk about that here. Whereas overseas, the company has also piloted tested runs with Starbucks locations in Asia while also holding partnerships with other heavyweights like A&W. My point here, with Beyond Meat already so popular and so broadly available, there's less room to grow from a distribution standpoint. So she's almost trying to spin that the way that Beyond Meat is already so broadly available, already so available in so many different markets to so many different people, and they're reaching so many different people, is actually a bad thing. The fact that this product is out to more and more people is a bad thing. In my prior article on Beyond Meat, I highlighted that the stock looks incredibly expensive. I disagree. Even when looking at earnings expectations multiple years into the future. Beyond Meat's latest hiccup have caused a reduction in forward-looking estimates. Now analysts expect only a $1.21 in EPS in 2025, indicating that Beyond Meat trades at a greater than 100 PE ratio against its earnings power for 4 years into the future. For a company so laden with near-term and longer-term risks, I'd say that Beyond Meat is a bad bargain. Again, I disagree, but I digress. Let's now address Beyond Meat's most recent quarterly results in more detail, a quarter that flipped investors' optimism on Beyond Meat and called into question the company's pandemic execution. Beyond Meat's revenue growth to just 3% year over year to $94.4 million, drastically missing Wall Street's expectations of $132.2 million by more than 40 points. One of the worst quarterly misses in the earnings season, and uncharacteristic for a company that usually sails past expectations so easily. Usually sails past expectations. Usually. So they usually have phenomenal earnings. Maybe they just had a bad quarter. You are in the middle of a pandemic, come on. We note as well that Beyond Meat's revenue growth decelerated sharply relative to 69% year-over-year growth in quarter 2 when the pandemic was already beginning to work its way through Beyond Meat's fundamentals. Pre-pandemic in quarter 1, Beyond Meat was able to grow revenue at a stunning 142% year-over-year pace. Breaking down this growth by channel and geography helps to distill the issue in a bit more clarity. The only bright spot in Beyond Meat's US retail channel, that is retailers like Walmart and Target. This makes sense as with the closure of many indoor dining places, people are eating more at home. In the United States, at least, the growth in retail sales was able to offset a negative 11% year-over-year decline in restaurant sales. The same could not be said of Beyond Meat's international business, however, which is previously contributing roughly 1/3 of the overall business. While retail sales still grew, a massive negative 65% year-over-year decline in restaurant sales decimated revenue overseas. Beyond Meat ended with excess inventory intended for its restaurant channel because these types of units are packaged and prepared differently than for the individual package sold in grocery aisles. Beyond Meat had to take inventory write-downs as well as prepackage some of its unsold restaurant inventory to sell it through the grocery channel instead. As a result, gross margins fell sharply from 35.6% in the year-ago quarter to just 27% in the current quarter 3. Even when stripping out the 2% points of margin loss that Beyond Meat is attributing to the virus non-recurring issues, Beyond Meat's adjusted gross margin still slipped 670 basis points to 28.9%, owing to its smaller production scale. So this analyst is failing to see that this management team has adapted and they were able to spin those products so they weren't taking as great losses. I think that was a great move by the management team they did here. That's failed to be mentioned again by this analyst who's not looking at it from a positive perspective, as opposed to they just had to throw out all their inventory. They were able to repackage it and reamp it so that it didn't go completely to waste. Beyond Meat's management team highlighted that one of the issues is that quarter 2 saw many groceries and grocery meat customers themselves load up product in their freezers, which led to inventory unwinding in quarter 3. This is the primary driver behind the deceleration from 195% year-over-year growth in retail sales in quarter 2 to just 41% year-over-year growth in quarter 3. In the United States, Beyond Meat's CFO also noted that the company had to use more trade discounts in order to drive grocery sales, further pressuring margins. The only glimmer of hope in the grocery channel is that the company signed a large new partnership per CEO Ethan Brown's commentary on the quarter 3 earnings call. We are pleased to announce today that as of January 2021, the Beyond Burger will be available at 7,000 CVS Pharmacy locations nationwide, and Beyond Meatballs will also be available at 5,000 CVS Pharmacy locations across the country. We continue to launch new products with the Beyond Meat Rapid and Relentless Innovation Program, having brought to retail markets Beyond Meatballs and Beyond Sausage Links in the past 3 months to strong retailer acceptance. Large deals like this, however, will be harder to come by as Beyond Meat's saturation of the United States continues to grow. This is true, and this is the same for any company, and she's just kind of putting a damper on the fact that they just had a huge deal go through that's going to expand this brand even more. Note as well that Beyond Meat suffered steep drops in overall profitability as well in quarter 3, with adjusted EBITDA falling to negative $4.3 million versus a profit of $11 million in the year-ago quarter. Adjusted EBITDA margins also fell by 1,650 basis points, largely owing to declines in gross margin. Beyond Meat's pro forma EPS of negative 28 cents also severely disappointed against Wall Street, which had expected a profit of 6 cents. Key takeaways: there are no near-term solutions to Beyond Meat's problems, so there could be long-term solutions. Restaurants in both the US and overseas, primarily in Europe, still remain shuttered or operating in a limited capacity, and quarter 3 results have shown that sales in the grocery channel are slowing down, as well as after unnatural stacking up their artificial boosted quarter 2 revenue. Don't be tempted to buy the dip just yet. The correction still has further to go. So to me, after I read this, and after I read it again, after I read it the first time, it seems like this analyst is very caught up in Beyond Meat's most recent quarter, and I feel like he has a very short-term, narrow mindset. He's failing to see the total market that this company is going after. He's failing to see the long-term vision of this company that I see. It just seems like he doesn't understand the industry. He doesn't understand that veganism has been increasing year over year over year for several years. It's just going to continue to grow, in my opinion, and he just doesn't see that, and maybe he thinks it's a fad. We have different opinions. I mean, at the end of the day, we'll look back in 5 or 10 years, and we're just going to see who is right. He says this stock isn't a buy, but hey, I'm buying right now. If it goes lower, I'll buy more. Thank you guys so much for watching. I really appreciate it. I hope you guys got some value out of this, and I hope it showed you guys that you have to develop your own opinions, and just because you read an article doesn't mean that article is always going to be right. Granted, it doesn't mean that I'm right, but that you shouldn't be afraid to have your own opinions and be confident when you are investing, guys. It's very important. Make sure you're very confident when you're investing. If you got some value out of this, make sure to drop a like on the video. That really does help out the channel in massive way, as I talked about earlier. Also, subscribe to the channel if you want to see more videos like this, and turn on that notification bell so you don't miss any future uploads. Let me know down in the comments what videos you want to see next from the channel, and if you got any value out of this video, and I will see you guys in the next video.